India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning. We are coming to you live as always from the CNBC TV 18 Motilal Oswal studios, and I think today will be the day when we say that the Nifty is crossed past 25,000 in a clean, nice way. Not this point, this much left, or 30 points left, 20 points left. 3 days now the market's been biding time ahead of the Fed event. That's done now, and as the GIFT Nifty is indicating, it's going to be a good start. I'm Prashant. With me, my colleagues Nigel and Surabhi is with us today. Guys, hi, morning.
Hi, good morning, guys. I like your confidence. I mean, don't want to spoil the party. Asia is down, but yeah.
You know, I remember on closing, it was the day before yesterday, you guys were taking bets. I'll take a bet today. It's much more certain.
It's a safer bet, right? He's playing the odds well.
Well, and we've got plenty of cues, right? The Fed didn't disappoint overnight. You've got plenty of result reactions, and then you've got that tax notice on Infosys. So we've got an action-packed day ahead. And it's Nifty weekly expiry as well. So, Prashant, let's kick start.
Oh, absolutely. And definition of hands full.
Absolutely.
And how. Well, let's just quickly sort of rewind the clock back and take you to what the Fed did, because I think that's the big mover this morning for Asia, for India, for, so much else as well. So you had the Fed Chair Powell now basically confirming the Fed is closer to cuts, rate cuts if data cooperates. That's point number one. Essentially, I mean, the gist of all of it, the press conference, the statement, the Q&A, everything is essentially that they're closer now. And the important thing is that all of the commentary essentially suggests that the bar for a September cut is not very high. They're not fixated on one point, on the data being this or that. It's a process, as Chair Powell in the Q&A sort of addressed many times. The market's base case as a result has moved to a 25 basis point cut in September. That's the base case which the market is building in. But if you look at, what the market pricing is indicating, last night after the Fed meeting and everything, it moved up to 30 basis points for September. So that is, essentially that suggests that maybe it's, some are saying 50. Could it be 50? Well, let's not go that far. 25 is the base case. And the market's now kind of very anchored towards the fact that we will get 25 in September. Remember, they're still data dependent. And in that sense, the job market data tomorrow, Friday, is going to be important. The monthly number, the NFP, which we get. U.S. equities responded. So Nasdaq was up 2.6%. There were earnings to boot as well. I'll get to that in just a bit. But the S&P was up about 1.5%. Yields across the board, the 5, 10, 30, everything came off very sharply between 11 and 15 basis points. The 10-year on the US was down 11 to 4, just about 4% now. So, it could be 3 point something from 4.5, 4.6, not very far away. That's a big change. And of course, the dollar index is below the 104 levels, around the 104 levels as well. So dollar is also weaker. Now, after the New York close, you had Meta, which reported earnings, and the earnings beat expectations. It's one of the so-called Magnificent Seven, and the market is watching the signaling impact from this very closely. Remember, so far what we had from Microsoft and early last week has not been all that great, Google, etc. But Meta beat. There was also Qualcomm, which gave a bullish forecast. And I think this is adding to optimism that maybe what we saw overnight will continue this morning and into US later as well. Oil prices, they'd sort of fallen one way, 8% or so till day before yesterday over the last 1 month. But there was this geopolitical premium, especially in the Middle East. So there was a 3% pop. I think we're back above 80-ish, $80.5 a barrel. The impact, the implication from a Fed cut. It's not as if Fed hikes have hurt markets, global markets. Fed has hiked interest rates by 500 basis points. But the US market is at a record high. The Indian market is at a record high. And global markets have done very well. But for emerging market perspective, what matters from a Fed perspective is essentially flows, foreign flows, which have been hard to come by lately. Last 3 days, FIs have been sellers and the market has struggled. And the sort of idea is if that starts to turn, you essentially get one more support apart from domestic liquidity. So circling back to specific levels on the way up, as I've said, the resistance for the Nifty essentially is 25,000 to 25,337. Focus on the upper end of that band. That's the extension level, 25,340 or so. Supports come in at the 40 hourly average, which is 24,780. It's the nearest support. And of course, 24,530 is the 20-day moving average. Bank Nifty needs to take out the recent high, which was 52,340. We're very close to that level. And on the way down, Monday's low. This week, Monday's low of 51,186 will be an important level, which the Bank Nifty must sort of defend if there is any selling, any hesitation which starts to appear. And I'll just leave you with the GIFT Nifty, which I think is indicating that 25,000 par level with 60-65 point gap up this morning. Surabhi.
All right, Prashant, absolutely. So I guess the biggest positive cue is coming from the Fed, right?
Yeah.
But we do have headwinds around our neighborhood and here back at home. So I have to put that on the table as well. For the Fed, I just thought we'll put out the line from the statement and also Mr. Powell's press conference, because very rarely do you have any Fed chief coming out and actually giving a month as to when the cuts will happen. So just for reference, the statement is up. So the FOMC statement said that in recent months, there has been some further progress towards the committee's 2% inflation objective. That was the wording in the statement. But in the press conferences, when the market got the real kicker, because that's where Mr. Powell himself said that if that test is met, meaning if data continues to suggest that inflation is going down, if that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September. Not usual to get a specific timing, a specific month from any Fed chief, but that's what we got, and the market was rejoicing. The U.S. yields, by the way, in the tumble overnight, they've gone back to levels last seen in February. In February, early Feb, is when the U.S. 10-year had started its upward trajectory, crossing 4%. The other, of course, headwind is oil. Brent is closer to 81 again, given everything that's happening. It's almost like it's out of a movie, but it's not a movie, it's reality, with the killing of this Hamas leader, that too in Tehran. So lots of geopolitics at play over there, so let's watch for that. The other global headwind is actually coming in from the way Asian markets are reacting. There's no sweeping rally across Asia. The Japanese market is down 3%. That's at the headline index level, the Nikkei. The Topix is down almost 4%. So that market's sort of reeling under its own issues with the Bank of Japan cut coming in yesterday. The yen has crossed 150 to the dollar. Huge weakness in the Japanese currency. So those are some of the Asian cues to keep on board. A lot of regional markets like Hong Kong, even Singapore, they're all down. For us, talking about the fund flows, Prashant mentioned that FIIs, they've been net sellers for a while. That continued yesterday. Sold off stocks worth about 3,500 crores in the market. Good news, as usual, is that domestic institutions are buying. Their buying was almost offsetting the FII selling at 3,300 odd crores. Results, of course, our team is going to tell you more, but it's been a sort of a mixed picture after market hours. Just to give you a flavor, Nigel tells us that Tata Steel was more or less in line. Bank of Baroda has been a bit of a mixed bag. The asset quality is improved because they've sold off a lot of bad loans. The margins, however, are under pressure. So let's see how the street reacts to that. Then you've got some strong earnings. GE, T&D would be the one I'd watch for. Very, very strong top-down beat coming in over there. It's a very heavy results day today as well. The names are on your screen. ITC, Tata Motors, Sun Pharma. Lots of interesting large mid-caps like Thermax, Imami, as well as Zomato. So we have our hands full. And as if we needed more, there's the big Infosys news to react to as well. So the news is that the company has received notices from two separate entities. At the state level, it's the Karnataka State GST Authority, and at the central level, it is the Director General of GST Intelligence. The demand is 32,403 crores. The company is outright denying it, saying that it's already met all its obligations. We'll talk about that in more detail in just a bit. But this maybe is going to be a bit of a dampener on that stock, at least for the day. Let's see if it has a ripple effect across the sector. But it's a big one, and that's a big number. So it's something that can't be ignored.
Well, that's right. The positive overnight cue is that's what's going to help the Nifty get to around the 25,000 odd mark. But the question is, can we stay above that level, that 25,000 odd mark? So we'll know later on in the trading session. The second point is Infosys, that big tax notice has come in there. But will the markets choose to look through that and, in fact, buy the dip? And, from a market perspective, I think that dip could get bought into. So let's see how that goes, because that's going to be a bit of a drag in today's trading session. Just to start off first. By the way, today is the start of August, and historically, August has been quite a good month. If we look at the last 5 August, well, it's been more green than red, though the last one was a bit of a downer. So August normally throws up a 2.5% to 3% move. Let's see which side we go for this time around. Global cues are positive, as I said. Two indicators. One is the dollar index is weaker, and the yield as well. The US 10-year yield was softer because of the more dovish than hawkish cues coming in from the Fed. Let's focus on Infosys then. And Infosys is going to be a large weight that's going to be lower. it's part of the top 5 weighted stocks on the Nifty itself. So, you'll have to see some kind of support coming in from the others, or Infosys itself will have to see some bit of recovery from the lows of the day. Infosys, the weightage on the Nifty is close to around 6.1% or thereabouts. So they'll be keeping an eye on the others as well. ITC comes out with its set of numbers, but Infosys, 6% will start off a little bit low. So let's see what kind of buying we see on that one. Positioning on index futures, the FIs, they remain net long. Clients remain net short with close to around 60,000 contracts on the short side. It hasn't moved much. That's why I haven't given you the change overnight. What about the options data? Today's weekly expiry and 2 strikes were fairly active. The 25,050 call and the 24,900 put. So just plugging in those premiums out there, you'll get the broad range. On the upside, 25,050. I've been saying this from the start of the week that that's a bit of a resistance level. And because of the options data, that's the vicinity that we're looking at. On the downside, support comes in at around the 24,800. For today, the 24,850 mark becomes rather important. The Nifty Bank, that's going to be the mover for broader direction and, from here on, because it's pat in the middle of the 20 and the 50 DMA. Which side it moves, which side it breaks to, that's going to be important. For the time being, it's pat in the middle out there. The 20 DMA a little bit away, while support is at the 50 DMA. The stock I'm looking at is Tata Steel. The numbers were actually showed a bit of an improvement. The problem is that, they're waiting for a Supreme Court verdict with regard to whether or not the states can go ahead and levy taxes retrospectively. So that's going to be important, and that could weigh on the stock. So though the numbers are important, I think the street takes note of the debt in the books as well as the crucial verdict that's awaited. So that could be a stock of the day.
You never get away from taxes, right? Company level, personal level, taxes are a reality, and they, hold the key to our happiness or unhappiness, whichever way it might be. Let's move on. Get to some money market views for the morning. We have Parul Mittal Sinha of Standard Chartered Bank, who says that the USD INR continues to trade in a narrow range, with local banks accumulating FX reserves at a consistent pace in the 83.40 to 83.60 range. She says local banks absorbed all the month-end FPI flows while oil import demand led to a gradual rupee depreciation. She continues to expect the pair to trade in a range of 83.55 to 83.90 in the week ahead.
Well, she also weighs in on the bond market. She says that India rates moved lower as draft LCR guidelines released by the RBI has led to expectations of incremental bond buying by the bank. She says RBI has also released circular notifying new 14-year and 30-year bonds as non-fully accessible route securities, that is non-FAR securities, thus limiting the FPI participation in future 14 and 30-year bond issuances, which led to steepening of the bond yield curve. 10-year yield this week is going to take cues from global rates and expected to trade between 6.85 and 7% in the near term.